Welcome to Money with Mark Albert. So glad you're with me today. The Bank of Canada had a rate announcement today being September the 4th, 2019. And for all you Star Wars fans out there, may the September Force be with you. And we're going to talk about that, what the rate announcement was, but we're also going to talk about kind of globally and in Canada, domestically, what the Bank of Canada are thinking. All right? So this year, we have two more rate announcements in October and on December the 4th, which happens to be my birthday, so I expect to get some happy birthdays on that one. And then next year, we got 8 rate announcements. So if this is something that's important to you, please subscribe, all right? Subscribe, then you'll get all the updates. Click the bell for notifications. That way, you'll get notifications on these particular updates, because this is pretty handy. I'm going to keep doing them. I enjoy doing this. So what they did is the Bank of Canada decided they would maintain the rate. A lot of people think that in the next 2 rate announcements, they're going to make a decrease in the rate announcement. That's because there's a lot of pressure from the U.S. Federal Reserve because they dropped their rates. Many banks or central banks around the world have also dropped their rates this year as well. But there's a reason why we didn't drop ours, and we're going to get into that. So globally speaking, the U.S. trade conflict has escalated, right? World trade has contracted as a result of that, and business investment has weakened because of what's going on there between U.S. and China, 2 biggest global economies at odds, ongoing tension. So this is weighing more heavily on the global economic momentum that the bank thought we would have. The Bank of Canada thought back in July they were projecting a bit better momentum. Well, because of what's going on in the U.S. and China, they feel that has hurt that momentum that they were anticipating. So still globally, growth in the United States, it's moderated but remains solid, right? It's supported by consumer spending and government spending. So consumer spending is a big part of GDP. And so if consumers have confidence and continue to spend, that's going to continue to help the economy. And right now, in the U.S. anyway, consumer spending and government spending has been consistent and assisting to remain strong down there in the global economy. Commodity prices have drifted down as concerns about global growth prospects has increased. And these concerns, combined with policy responses by other central banks around the world, in terms of them dropping their rates, they have pushed bond yields to historic lows and inverted yield curves in a number of economies, including Canada. Now, what happens as a result of this bond yield continually dropping, the 5-year fixed rate for mortgages has also continued to drop. And that's why today you get a really, really good deal on a 5-year fixed rate compared to the 5-year variable rate. Now, all year, this whole year, the Bank of Canada, every time they had a rate announcement, they maintained the rate. So the 5-year variable rate has maintained at where it's at right now. So now let's focus on Canada. All right, domestically speaking, growth in the second quarter of this year was strong and exceeded the bank's July expectations, although some of this strength is kind of temporary. All right? Housing activity has regained strength more quickly than expected. The lower mortgage rates that we talked about with the 5-year fix has obviously helped that. This could add already high household debt levels, although mortgage underwriting, they feel the rules are going to help to build up against these vulnerabilities. Now, debt is debt, and if people build too much debt, they grow in vulnerability. And so the government rules with the stress test is designed to prevent people from getting higher levels of mortgage debt. And so we'll see how that pans out. So also in Canada, consumer spending was unexpectedly soft in this past quarter, so in second quarter. All right, remember I talked about consumer spending and how important it is to drive economic growth. All right. So I heard one commentator say that, also immigration's been high in Canada lately, so that has also had a positive impact on the economic growth in the second quarter. Business investment contracted sharply after a strong first quarter, and heightened trade uncertainty. Given this composition of growth, the Bank of Canada expects economic activities to slow in the second half of this year. So we're already in the second half, but we still have a lot more of second half still available. So we may see ongoing slower growth. That's what they're anticipating. But the inflation rate in Canada is at its 2% target, which is good. And that's one of the reasons why probably they decided to maintain the rate. So if inflation was lower in the first part of the year, and then it's really strengthened just recently. A lot of it's been temporary activities been happening, but that's kind of good there. So in terms of a summary, Canada's economy is operating close to potential, and inflation is on target, so close to potential. So this 2% target inflational rate, GDP of 2%, that's where they want it to be, right? Escalating trade conflicts and related uncertainties are taking a toll on the global and Canadian economy, right? So if we continue to see ongoing conflict in the U.S. and China in particular, and tariffs, then this is just going to get worse and worse and worse in terms of slowing down the global economy, and it's really going to force us to lower rates at the Bank of Canada level. And then thirdly, Governing Council of the Bank of Canada, and those are the people that get together to make these decisions, they will pay particular attention to global developments and their impact on the outlook for Canadian growth and inflation. So basically, what's going on globally and how it's impacting growth and inflation in Canada, and that's important to them. So here we go. These are the next updates. Please subscribe. I'd love to have you be part of our community here. We do a lot of other exciting things on this channel, but subscribe for these Bank of Canada updates. Thank you so much for being with me. I trust this was a valuable use of your time. Have a wonderful day.